It's time for today's three-stock lunch now, and here with our trades is Gina Sanchez, Chief Market Strategist at Lido Advisors and a CNBC contributor. Gina, welcome. Let's start with Palo Alto, picking up on Christina's report. Would you, step in front of this much ballyhooed earnings report tonight?
So, she really hit the nail on all the really big issues for Palo Alto Networks. This is one that Lido Advisors owns in their strategies, one that we've held for a long time. And the fly in the ointment for Palo Alto is that it is more overpriced than other stocks. So but it is also a leader in its space. And yes, Microsoft has definitely shown some massive growth on their side, and they have a distribution network that you don't want to mess with. So I think that that's going to be something for the future that Palo Alto Networks will have to contend with. They're also contending with, competition from Fortnite, from CrowdStrike, and their other competitive landscape. But they do still remain the leader. They are expected to slow. That is expected. And so I think that the secular play here is still there. Cybersecurity is not going away. If anything, it is getting the demand for it is going up and will probably continue to go up as we continue to build out more and more cloud-based apps and infrastructure. I think that it will just moderate at some point. And so what really has to kind of start to find a space is the valuation. And that's the fly in the ointment. But it's still a strong long-term play.
All right. We'll see if they can climb that multiple wall, so to speak. At a quick programming note, Palo Alto Network CEO Nikesh Arora will sit down with Jim Cramer on Mad Money on Monday at 6 p.m. Eastern. We're looking forward to it.
All right, next up, let's go to Deere. Despite beating the street's earnings estimates earlier this morning, the stock is down 5% today on questions over how long the farm boom can last. What's the trade on Deere here, Gina?
Deere, another one that we own. This is one that definitely has, some challenges into 2024. It has been riding off of sort of the loosening of the supply chain crunch that they've had, so they were able to fulfill more orders, and that is showing up with really strong growth. But 2024 is going to be a tougher year for them. So I think that this is a shorter-term play right now, and there is some caution in the long run.
All right, let's move on then to Ross Stores. That stock jumping after beating earnings Thursday night after the bell, showing that off-price retailers, TJX, Ross, they're looking pretty good right now. Would you still buy it after this pop?
So I think that this is still a play right now because I think the slowdown is going to continue. I mean, we talked about TJX last week, and I like this one as much as I like TJX, and they're valued about the same. This one's at 21 times forward earnings. I think that is reasonable right now. And I think that the demand for low-priced goods is going to remain as we continue to just soften. But we are still seeing consumption, so I think it's a good play.
All right, let's turn our attention, Gina, to some of the stock draft picks. We have first NVIDIA. That was the first pick by WWE superstar Charlotte Flair. It's put her in first place. The stock is up more than 50% since the draft. It reports results next week. What do you think of NVIDIA?
Well, so NVIDIA was high on our list. Remember, we were the number 10 draft. So by the time we got to
some of the
us,
NVIDIA
was long gone. This is a stock that has been, everybody has loved this stock as the cloud has continued to build out. It got this second boom with the generative AI craze, which also actually spurred real demand. I think that this stock has a secular story that's not going away, but it has definitely gotten ahead of itself. I think that the multiple here could be at risk, but sometimes expensive stocks stay expensive for a very long time in secular plays. So you do have to, if you're riding this stock, keep riding it.
So that brings us to PayPal. Are you going to keep riding it? It was y'all's first pick, Flynamic Duo with Diamond DeShields, down about 18%.
That was our second pick.
Oh, second pick. Thank you.
Second pick.
Thank you for clarifying. This was the leftover. You wanted NVIDIA, but it wasn't there. What would you do with it now?
Well, to be fair, the reason that we chose Google as our first pick, and that was really a story about continuing ad demand and strong play with the high multiple stocks while still having that defensive story. PayPal was about getting a cheap entry into e-commerce. And if you look at PayPal, they had about a 13% growth in EPS last year, which is about their long-run aventage. This year, they're expected to turn in 19% growth, and that's with margins that are continuing to get hit because they're having more and more flow on Venmo. which is a lower margin business. And I think a lot of folks are really punishing them for that. But their forward earnings are 11 times for 19% growth. And I think that is I still think that by the time we get to the end of the year, right, by the time we head into the Super Bowl, which is when this time horizon ends, we will possibly have seen another rate hike. We will be at the end of rate hikes, and we won't be seeing any kind of meaningful rate cuts by that point. So I think that the high valuation stocks are going to be vulnerable, and this is one that's going to continue to deliver despite Apple Pay, competition, and despite margins. They're still going to turn in 18 to 19% profit growth 11 times. Believe me, there are going to be investors that are going to sit up and take notice.